Today, I'm going to discuss a very simple VWAP strategy. I'm not going to go over all of the details of the different time frame VWAPs, rolling VWAPs, specifically anchored VWAPs to a high or a low or an event. Trading Riot has a very good description in his blog. I'll post a link to that in the description. And certainly, I will elaborate more on how I use VWAPs in later videos. But for today, I'm going to give you the simplest of VWAP strategies, entry, exit, very reliable. Please like and subscribe to the channel. If you have any questions, hit me up in the comments. If you have any indicators that you want me to cover in future series, let me know in the comments. All right, let's get into it. So I use the Koala Field VWAP on most of my charts because it has the daily, weekly, monthly, quarterly, yearly, and the standard deviations. So it's just a really clean way to not have 10 different indicators. And if you have a free TradingView account, this is great bang for your buck in terms of limiting how many indicators you can have. It is a free indicator, and I'll post a link to the indicator in the description. When you come in, it lets you plot all the different ones. Because it's December 1st, the monthly is the same as the daily. Every Monday, your weekly is the same as the daily, so on and so on. So you don't necessarily want to have all of these on your charts. I don't use a daily on a monthly. I don't use a monthly on a monthly chart. So really when I'm looking at high time frame, right, I'm looking at the yearly. You definitely want to come in and change some of the colors to fit your particular chart, but it's very, very easy and intuitive. Uh, I always start again with the monthly. This lets me kind of see the trend, where we're going. When I see a flat VWAP, it tells me that we're in a range. We're not trending currently. As you kind of cut down on the time frame of your charts, you want to start using those lower time frame VWAPs, and it really just gives you an idea of where the bulk of the trades for the period have been, how it's shifting, how strong the trend is, right? Uh, on the daily, you can certainly then come in and start using your weeklies, monthly, quarterly, whatever you want. Play with it, play with the standard deviations, because that is going to be how this strategy is used. All right, so on a 15-minute chart, you get the daily VWAP, which is anchored to the start of the day, so 7 p.m. Eastern. I like to use Binance charts. They have the most volume, they're the most reliable, they're the most accurate. When you come into the indicator, you want to plot the standard deviations. And again, you can change these colors, but what you're looking for is a move away from VWAP after open, a impulse away from VWAP, and then very simply, your TPs are the standard deviations. So for Tuesday, November the 29th, we opened up, we chopped around VWAP, we impulsed away from it. This would be my entry right here. This kind of close to retest, or I would have obviously tried one of these, but essentially you're looking for a cross, an impulsive cross of VWAP, and your TP is just going to be the standard deviation, right? Uh, if you look at uh, the November 30th chart, we have this chop, we have this impulse away. This would have been an entry, but probably the easier entry was this one right here, right? Once this VWAP holds, then you know that the buyers are legit. So this would have been the entry, and you're looking at the first standard deviation band is at, oh yeah, turn the magnet off. Would have been close to a 0.5% move, and then a full percent move on the second standard deviation. And the way I would structure this is once that first TP is hit, I'm moving my stop loss break even. I'm taking at least a third, if not half, depending on the market. If we're trending, I'm going to take less. If we're in a range, I'm going to take a lot more. Sometimes my TP1 is 75% of my position. If I'm not really expecting a larger move and we're just chopping, sometimes it's 10 or 15% of my position. It just varies depending on whether we're ranging or trending. Uh, but it's very, very basic. Impulsive move away. Your entry ideally is the retest, and your TPs are just the standard deviations, TP1, TP2, and then leave some for a higher key level. Ideally, you have a key level to go with this, and then you can have more confluence, you can go bigger. But as you can see, if you look at Bitcoin, even on a day where there's just a ton of chop, impulse away, reclaim, one standard deviation, two standard deviations. This day was incredibly boring, nothing happened, but you can see right there, impulse away, at least it gets to one standard deviation. If you leave your stop loss at one standard deviation below, you would have hit the second standard deviation. On this day, it, it lost, it went up above it, it came back down, so the better entry obviously was this one, and then it hits two standard deviations and it keeps going. The question obviously is, how do you know which entry is the better entry? Okay, sorry guys, I had to fix my volume indicator. It got messed up. So when you're looking at this strategy, it's really easy in hindsight to say, oh, look, here's your entry, here's your TPs, it all works out great. When you're in the trading day, sometimes it's hard to know which one of these moves past VWAP is the move and is the successful play. In my experience, if you give this room, meaning if you don't have max leverage, super tight stop loss, it's going to work out more often than not. But I look for confluence, a break of a trend line, a break of a level, whether that's a fib level or a level that I've marked out on my charts, a break of a resistance or support, any kind of confluence that goes with it. But one thing that I almost always look at is volume, and I'm constantly trying to gauge whether volume is increasing or decreasing. So on this move for the 28th of November, you can see volume is trending up, it comes down, it reclaims, but it reclaims with more volume. That is the confluence that I would need to enter the trade, right? When you look at the 30th, same thing, right? You're seeing that move with volume. This today, right now, is not an entry that I would take because we've got PCE announcement in 40 minutes, and I'm not looking to enter a trade 40 minutes before an announcement. I'm not going to take this trade 20 minutes before New York opens. This is something you want to take during market hours, when there's trading, when price has chopped around VWAP for a bit and then makes an impulsive move.
All right, guys, make sure you subscribe, like the video. Let me know if you have any questions, comments, if you want any indicators reviewed, and check out Bing. They've got amazing new user rewards. Their platform is super intuitive and easy to use, and you can trade tons of different stuff. All right, till next time.